I'll just ask it now. Tie it in here if you think you can. AV getting pounded today, yet call option prices haven't gone down nearly as much as you might expect. What gives here, Anne Marie?
So that's a very astute observation. And the reason for that, we can see, and I choose reason in quotations, right? So if we stare down what these chains are doing, we can see that we've got twice as many calls to puts, thereabouts. And so when we see heavy call buying, when price action is down, it's telling us big market participants are staring down support zones that they're going to load up on. So what I like to do is look for opportunities where the volume has been the highest. And so we saw in the last earnings event a big volume spike, right? So that area actually is the biggest spike of the year. And so when we stare that down, a key thing to do is the following. You mark it with a box, then you draw a Fibonacci into the low of the area, and you look at this 50% range. So here's what price action has a tendency to do on very large volume. It has a tendency to test that 50% range, as well as test it again if it's going to hold. So the traders obviously are saying, hey, listen, I got a 61.8 retracement event. I'm going to try and buy it here into this formation. So now we collapse down into a daily chart. And we can see on that daily formation, the big volume events are twofold. We have one here with a low of where the wicks came in. And that, again, very close to the 38.2. That's $227. And the high is up here near 250, right? So this is the box they're playing in. Now, people might say, hey, I've heard this. Volume is not an indicator. Well, I'm going to tell you this. I vehemently disagree. And for many years, I actually stood on that side of the fence. But what I noticed is big money clusters into the areas where they know volume is going to capture itself. You see it all the time. So now we have two things to look at. Do we have a chart that continues down, trend, high, lower high, lower high, retest of that high, and then potentially another lower high? Low, lower low, lower low, lower low, lower low. What's that telling you? That's telling you that it's got trend into the downward space. But where is the floor of that downward space? It's down here near 225. We're up here at 231. We can see the traders are trying to hold the floor to get back to the top of the box. Now, statistically speaking, this is a coin toss trade if you get engaged right here. This is the monthly open at 240. And so when you have a coin toss trade, you have to be thinking about some sort of neutral strategy, in my mind. And so the neutral strategy I like is the iron condor, right? And so because look at the volatility spikes. Look at this volatility for September the 12th. It's 153%, right? It is higher by, what is that? 60% of the following week. So you might go, wow, Anne-Marie, 3 days to expiry feels a little bit like gambling if I choose this 250, 260, 200, 190 iron condor. But the chart tells me the traders are going to try and defend this zone. Could they wick down and then bounce back up? Yes. Could they wick up and bounce back down? You better believe that the traders who came in here and said, no, this is it. We're breaking over the top of this volume box. Here we go. We're going into the next batch. When that's here, they're going to wait for that rotation and they are going to try and sell it. And so I love the iron condor here. It gives us a lot of credit for 3 days of holding. So the question might be, well, what do I do, Anne Marie? If it starts creeping into these levels, you just have to close it if you're not savvy with options. All right. If you are, you can roll it into the next week where I think it's going to hold the same structure. Notice if you go to next week and you try to take that trade, it does give you a little bit more premium and it gives you a little more time. So if you are erring on the side of caution, this might be the cleanest trade for you to look at. If you're a little bit of a gambler and you're looking for the big win in a quick strike, you might choose the 12. But the probability of being wrong here is less than 2%.
Okay.
And so that makes for a really great trade